What is going on in the Phoenix real estate market? I am here talking about that every Tuesday, and this week is no exception, except for the fact that I'm out of town, but don't tell anybody. This is still going to be valuable, I promise. I usually share more information about timely news articles, and I obviously don't have that today because I'm recording this ahead of time. But we're going to talk about some data that is super important to know so you have a good handle on what's going on in Phoenix right now. Last week, I had a comment about sales prices, and the sales prices really being affected by the number of sales over a certain amount, which is skewing the median sales price. That's what the comment was related to. And so I said this week, let's look at the number of sales in the various price ranges and see what's really going on. So to start, let's look at the median sales price. It's $449,000, basically $450,000. This is for the Phoenix metro area. Now, if we look at the number of home sales this year, I filtered this to be under $400,000 because I couldn't do 450 on this filter. So under $400,000, we've had about 7,400 sales this year under that number. If we look at the number above $400,000, we've had about 13,000 sales above 400,000. So it does prove to show that we have had a larger number of sales in those higher price ranges than we have below 400,000. So yes, it makes sense that that price range is going to be a little bit higher. That said, why are we seeing more home sales over $400,000? Is it because we just can't value homes on that lower end anymore because everything has gone up so much? I think that is likely the case. If you go back to 2021, we had 70,000 home sales that year over $400,000. And in 2021, we had 78,000 under $400,000. So it was a very close, almost 50-50 split that year. Moving on to 2022, then we saw 38,000 in those lower price ranges. And on the higher end, we saw 76,000. So that's where we saw a pretty big change. 2023, we saw 53,000 on the higher end. And on the low end, we saw 34,000. So this trend, it kind of flip-flopped after 2021 to see more home sales above 400,000 than under 400,000. So that's what we look like as it relates to, the breakdown of number of sales in the various price ranges. If we look at what's on the market today, this is filtered for under $450,000 throughout Phoenix Metro. We've got about 7,453 options. I think this also brings in some other counties as well. So this is probably a little bit higher than if you really just put the boundaries around Phoenix Metro. But just generally speaking, that's where we're at. And then if we go over 450,000, a lot more options out there. You're at about 10,794 options on the market as of today. So when it comes to prices, yes, we are seeing more home sales on that higher end. However, the question is that just because we can't value homes under 400,000 anymore because all prices have increased? Interesting stuff to look at. Now, let's look at the supply on the market. I thought this was interesting, and I haven't shared this graph on my channel before. This is all of this is from the Cromford Report because they compile all of this so easily from the MLS data. But we have 40% more listings on the market today than we did last year at this time. That's great news for buyers. If you are on the fence about buying and you plan to stay in your home long term, this is great news to know that you have more options out there than you did last year, 40% more. And likely when you have more options, you're not competing against multiple buyers, and you may have the opportunity to get more of I don't want to say a deal. That's not really the market that we're in right now. Depending on the house, it could be, but you have an option to actually negotiate a bit and not go over the list price and do all the crazy things that people have been doing for the last few years. Now, if we look at the number of listings on the market, I shared this recently. We're at about 17,500-ish. And yeah, it's higher than where we've been the last few years. But I shared this last week as well. If we go back in history throughout the last 10 plus years, we can see that 17,000 is really actually quite low compared to where we were at in a balanced market. And of course, much, much, much lower than where we were at in 2006. No one wants to go back there. So as far as active listings go, 40% more options than what you had last year at this time. That's a win for buyers. Yet we are still pretty well below where this average number of listings on the market is in a balanced market. So on the seller side, that's a beautiful thing too. We're not in a high inventory environment where buyers have so many options that your only choice is to reduce your price. Now, how many days is it going to take for you to sell your house? Well, throughout the Phoenix metro area, the median days on market is 27. And this is as of April 28th, so a couple weeks behind, but I don't think that's changed all that much. The way they measure this is based on the number of days it takes until you go under contract. So this is not from listing to closing. This is just the number of days you'll spend on market as an active listing before you receive a contract. And this is the median. So 50% of those listings get a contract before 27 days and 50% get a contract after that 27-day mark. So it really depends on your location, your price range, how competitively you've priced the house, and, of course, how nice your house is or how much work it might need. There's a lot of factors in that, but the median is 27 days on market. Now, if you are listing your house, you have a good chance that you will get 97.5% of your list price. So this is the monthly sale price to list price ratio, showing that sellers are getting about 97.5% of their list price. That's a good thing. We're not seeing, back in the day where people were getting 101.7% of their list price. It's a little bit lower. It's a little bit more on average. If we go back to, 2014, 97.4% of list price, this is pretty normal. This is a good place for us to be. Now, as it relates to the number of closings over list price, we're still seeing that. So most recently, 17% of closings in the last 30 days were over the list price. We can also look at the number of closings over list price by price range. So we're seeing the most closings over list price in those lower price ranges. Still, it's pretty minimal. And then the median amount over list price that people are paying for every price range, in these lower price ranges, that median over list price is about $5,000. So as a buyer, this is good to see what that competition looks like, if there is any. And as a seller, it's good to know that you do have an opportunity to get some amount over list price. Of course, if you're pricing competitively, that's where it all starts. Now, on the flip side, we're seeing a lot of seller paid concessions. So this is 43.1% of sales in the last month had a seller concession, the median concession being $8,700. For those that don't know, a seller paid concession means that the seller is giving a credit to the buyer, whether that's for repairs, for their closing costs, to buy down their interest rate. Either way, very common. Nearly half of sales are offering some form of seller concession. And something to think about as we're looking at the number of closings over list price, sometimes people are paying over the list price, but also asking for a concession. So the net to the seller can be the same, but the buyer can use those closing costs to buy down their interest rate and better impact their mortgage payment. So you kind of have to take some of this with a grain of salt, because just because sales are going over list price, it doesn't mean that there isn't some sort of seller concession. Therefore, it all shakes out to be, maybe the home sold for the list price, essentially, at the end of the day. So you kind of have to dig in on some of these, but that's what's going on with list price, sale prices. Now we're going to look at the Cromford Market Index because we do this every week, but just know that this is from the end of last week. This is not timely for today's video. 110.6, my guess is that we don't have much change between when I'm recording this and when you guys see this. But according to the Cromford report, anything between 90 to 110 is a balanced market. So we're just on the cusp of balance here. Demand is about 20% below normal. This has actually gone up just slightly since last week. We've been in the 70s for a really long time. And then supply is 72.4. So that's about 28% below normal. I do not have the chart for every single city because that has not come out yet this week. So unfortunately, I can't share that with you guys this week, but this is generally what we're looking at. So in place of that, I'm going to give you the contract ratio heat map. And this is pretty cool. I haven't shared this in a bit. The Cromford Report looks at all of these zip codes and they're comparing the number of listings that are available for sale on the market compared to the ones that are already under contract. And they give this contract ratio. Now, of course, if there are more listings for sale than are under contract, then that's a little bit of a cooler zip code or a cooler area of the valley. If there are more homes under contract than are available for sale in that zip code, then it's a bit of a hotter area of the valley because there's more demand there. Now, just by looking at this, you can see that there's a lot of cooler areas. 30 to 60, this kind of green color is considered balanced warm, so there's not a lot going on. As we see more of the yellows and the red, we're getting into hot, hotter, and eventually frenzy. So just by taking a quick look at this, you can see the Chandler Gilbert area and a little bit here in Mesa is a hotter area of the valley, as is North Scottsdale, some areas of North Phoenix, a couple in the West Valley, Glendale, Peoria, and in Tolleson. And then we've got some of those yellow areas as well, a lot in the Southeast Valley. We've got Buckeye and some areas of the West Valley as well, North Phoenix, and everything else is more in that kind of balanced range, not a ton going on in some of these other areas. So this is a good thing to look at because it is different from the Cromford Market Index. It is not seasonally adjusted. So when you look at this graph, you see these ups and downs every year because it's not adjusted for seasonality. Right now, this is where we stand. Pretty normal for what we've been seeing, back when things were normal. Obviously, these were kind of crazy times here, but nothing too out of the norm. And overall, throughout Phoenix Metro, the contract ratio is 56.1. So if we go back to their little guide here, between 30 to 60 is balanced or warm. So overall, the market is in that kind of balanced warm condition. Now, if you are a potential seller and you're just curious what your home value could be, make sure to check the description below because I have a link to an instant home valuation. And buyers, if all of this is encouraging for you and you want to start searching for some homes, use my MLS link to do that, and you can check the description for that resource as well. Thanks for joining me on my vacation week. I hope this still delivered value to you, and I'll be back next Tuesday with some more timely information to share on my market update.